Joining us right now is Aoifinn Devitt, Chief Investment Officer at Moneta. Good morning to you. What did you make of this ratings change?
It is important. It is relevant. The question is, of course, is it the canary in the coal mine for other similar downgrades? And I would say, is it a lagging or a leading indicator? I mean, this dance around the debt ceiling goes on year after year, where we're quite familiar with it. It's not a surprise. It was actually less drama this time around than before. So why is it now that the governance is being called out? I do think it's significant that it's been compared to other developed economies, because the governance, is it demonstrably worse here in the US than other developed economies? Or is this just, it may perhaps it falls short of what it should be? There's less certainty than what should be there. I don't think it falls short of other developed economies.
So here's the question, and it goes to the issue of timing. And I think everybody's sitting around scratching their heads. They're looking at the model. For those viewers who want to go online, you can go look at the model. They actually show you what they think. And almost bizarrely, at least to me, and I think a lot of folks who have watched this, you can look at the model going down, 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 down. This is actually pre-2020. And you would think if you were going to downgrade, that this was a decent time to do so. And then you see it actually change and actually start to go up, 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 up in a good way. And yet, here we are in a good way, and they're downgrading while it's going up. Can you make sense of that?
It's difficult to make sense of, but I do think, let's remember, many of these agencies lost credibility around the financial crisis. They were slow. They definitely probably were slow on the regional banking crisis. So there's a preference now to perhaps get ahead of another crisis, at least to wave the flag or raise a red flag earlier than others. There's little downside to doing that. There's probably more risk of not doing that. So I'd say that is unusual. And it's good to be reminded that these are still problems that haven't gone away. We have a very short news cycle today. We've just come out of catastrophizing around COVID and its implications. So now I think what we need to put this into context. So I think it's not unusual. I'm glad it's happened, because it's given everyone an opportunity to actually analyze the situation now and look at the impact and perhaps remind ourselves of just how precarious markets can be.
So I don't disagree with you at all about just the precarious nature. I would have probably downgraded the U.S. debt years ago, given where things are. But the question is, why now? And does it matter? Why now? And what does it do to S&P and Moody's and everybody else? Do they say, oh, my goodness, there's pressure on us to do this now? As we said at the top, these are all private companies. These are private companies, effectively analysts who work at these companies, who make these decisions. And so can you explain the economics of their business and the incentive structure of their business to make these decisions and calls?
Like any institution, these businesses depend on trust and credibility. We've seen central banks around the world vying for their own credibility. So credibility can be lost very quickly, especially with a big miss, such as missing a financial crisis. So they're vying for credibility. I actually think it could damage some of the other agencies' credibility were they to jump on this bandwagon. We talk about FOMO and markets and investors. This is going to look like FOMO, Me Tooism, getting on the bandwagon. There has to be a proper fundamental basis for this. And if other agencies can find that, great. But I actually think there's less of a problem now. The can has been kicked down the road. We have some other concerns, which is around the economic growth, inflation, and getting to the next election. So, why not focus on that instead of on something that has essentially been put on ice?
Why is the market yawning this morning?
They've had a tremendous run. The AI hype cycle has been driving markets. Inflation is heading in the right direction, although we know it's probably going to come in waves and include some uplifts in energy and food going forward. We're not out of the woods yet.
Specifically treasuries. If there was a real sort of freak out moment, I mean, I don't know, maybe you think that everybody's going to sit around for the next couple of weeks and reanalyze this Fitch report and then decide actually maybe treasuries really are a bigger problem. But again, going to your issue where you were sort of talking about the relativity of developed countries and where the U.S. stands versus others, do you think this changes the dynamic in terms of how investors buy treasuries?
I think treasuries will always be the bond of last resort. They will always be the preferred safety trade. Certainly relative to other countries, I think the U.S. is in a more robust state. So it's always a relative trade, as you mentioned before. We're seeing treasuries at these really record short-term yields. The yield curve is still inverted. We know where they're heading. So I do see this. We saw this with the de-dollarization debate as well. Was there going to be a widespread sale of U.S. assets? I don't think that's going to happen. That's why there's a yawn, because we recognize that this is yesterday's news.